watching TheoTrade. This is Corey Rosenblum, and you're watching the Theo Nightly video for the 11th of May here in 2021. And just got one question. Where is all the money flowing to? And that's a good question, because in today's session, we had money flowing out of the equity market. We're looking here at the S&P just at the end of the session here. It was down 1%. The strongest index, if you want to call it that, was the Nasdaq, the tech sector, and it had the biggest sell-off yesterday, but it's the strongest, and it's in air quotes because that is down 1/3%. And the weakest is the Dow, but guess what? That was the strongest index yesterday, and the Russell finishes down about 0.5%. Well, we'll look at the other things that are bearish. The bond market, that is TLT, which is the ETF, and we trade for the bonds, swing trades, or intraday positions, more so swing trades with TLT, but the bond market here is ZB, 30-year note, 30-year bond, and the 10-year note, ZN. Well, those are moderately down today. Here are the weakest stocks of the day, just going through the watch list and going through the top-level charts of today's session, putting it into a bigger context so we can talk about the next move. Simon Property Group, ExxonMobil, Oracle, Home Depot, which we'll come to in a moment, AIG, and Lowe's. A few others included. General Motors, American Express, and right there with ExxonMobil is Chevron. Well, in our sectors, we covered the markets, covered bonds, covered the weakest stocks of the day. How about the sectors? Only one sector was positive today, and it was the materials sector. Outside of that, the weakest was energy. And there we see why Chevron and, of course, ExxonMobil and others were bearish, and the most sell-offs, the most liquidating in today's session. So that's the weakest, followed up by financials, and that's a big one. That's something Don's been mentioning to us about the financial sector, and that is a weak sector with a almost 2% sell-off in today's session alone. Next up, we have the industrials. We'll come to those. That's down 1.5%. And then utilities and other sectors. Broad-based, we can look at the Market Watch tab, and this is the entire market. So we like to look at the market from this is the percent, and this is the index itself. That's any type of swing trades or intraday positions you make or lose money with the points trading up or down. But individual stocks, if you have swing or other intraday short-term positions, or on the sector note. We'll think of the sectors as 9 different segments of the market of 500 stocks. So this was just about the exact opposite in yesterday's session, because these were red, deep red, very red. Amazon, Microsoft, Apple, Google, Facebook, and Tesla were very bearish in yesterday's session. Everything else was about green, just about bullish across the board, at least until the last couple of hours. This is the opposite. Can't really call that strong, but the concentrated selling was not in the Nasdaq today. This again is the S&P 100, and the Russell sees across the board selling, and there's the Dow Jones, just 30 stocks, but there's the technology sector. So the big monsters of tech, Microsoft was down moderately today. Apple was down less than 1%, as was Microsoft, and others too. Now, Tesla was down greater than this, but at the end of the session, just under 2% to the downside. But the bulk of the Nasdaq, including Netflix, Zoom, PayPal, Amazon, Nvidia, Adobe, they were bullish today. They ended the session up. So that's a sense of where money's going. That's the original question we're looking at here. Where's the money going to? It's rotating. If we call it rotation, it's just buyers snapping up a little value in tech stocks that were beaten down or traded much lower on yesterday's session. Here's the other portion of the market. Those are the stock-specific sectors. Well, crude oil, as strange as it is, we're talking about shortages and the Eastern pipeline and all the things there. Gas prices, oil prices, crude oil particularly. It had an update today. Can we call that rotation out of the equity market into crude oil? Not necessarily, but it was a bright spot or a green spot in the market today. And that is despite ExxonMobil and Chevron being down. And it's a little bit of a separation there. Energy is not totally crude oil, but it does correlate. And we see gold. Gold ended the session flat. So that's a quick overview of everything we look at. Again, the stock market, individual components in it, leading and lagging sectors, and there's the strongest names in today's session: PayPal, Netflix, DuPont, Adobe, Amazon, Salesforce, Texas Instruments, and Nike. Those ended the session positive. Again, do we call that money flow out of these into those? Not necessarily, but those are things to watch. And again, the sector performance. So the biggest thing up in today's session is the VIX Volatility Index might be expected up 2 points, which is roughly 11%. And that is off the high of the session. And of course, VIX Volatility Futures up as well. So was it a rotation into volatility? Perhaps. But that's what we'll be watching as the week goes on. Individual earnings coming up would be Disney, the Walt Disney Company, and 2 sessions here. And then outside of that, Home Depot, Walmart, Target. Those are happening next week. And Lowe's. Speaking of those, one of the weakest stocks today was Home Depot. And that came off of a grossly overextended type of event. And it's just multiple days to the upside. And playing puts is a good strategy, but markets that run to the upside continue to creep. That can diminish the value of the puts. But a fade type of tactic can work very quickly. It just takes patience and experience to get the puts or to play the downside or the sell side of a market, especially of a trending stock this persistently strong. But again, just like the markets themselves, things that creep or take stairs to the upside can take a quick elevator to the downside. And that was true also as Lowe's achieved a bull flag target to a new high. And that has pulled back or retraced. Disney is the next stock to have earnings. And we'll just draw a reference point at about 180 per share. That is a dividing line between any type of bullish bounce. Again, earnings will dictate which outcome happens. Bullish support to keep the uptrend going. That's a buy type of opportunity if you play before, preferably after earnings. And if that level breaks, that could open up a downside path, swing trade, to under 170. We just saw Home Depot. There's Walmart and Target similar. Again, Lowe's. And these are going to stocks that are coming up with earnings in the next few sessions. Outside of that, we're just looking at key market cap stocks or key leading stocks. So what we'll do is take a look at the market cap stocks and just on a quick intraday basis. These are the stocks that make up the top 9. What I'll do is jump those down to 6. And these become what we call the monsters of tech. How about their action in today's session? Mostly flat. They all started with a weak morning, mostly, and stabilized throughout the session. These look like strange diagrams, but that's what the price did in today's session in Microsoft, Apple, Amazon, Google, Facebook, and finally Tesla. They didn't move that much in the grand scheme of things, but in a day where the market, and we'll take a quick look at this before we move forward. Now, this is the S&P 500. It was overbought. The predominant short-term thesis was a sell swing, and that took us back to these 4,100, 4,120 levels that has been achieved in 2 trading sessions. That's the S&P. Now, the Nasdaq has been weaker. It came down from the 14,000 print and now trades just around the 13,002 and 13,003 into the close. And that was a strong gap to the downside, coming off of a very weak position on earlier in the week, last Monday and this most recent Monday. So Mondays have not been very, very good for the Nasdaq, and that's Tuesday into the play. So early in the week, we've had sell pressure, sell side activity in the Nasdaq and the technology sector in general. But at the same time, that the Nasdaq was trading down, the Dow mini futures, the Dow Jones, mainly because of Home Depot and some other stocks that were leading, Caterpillar, that played up to 35,000, and that is now pulling back. Again, that's what's expected when a market goes a little bit too far or extends from its 20-day moving average. We call that a rubber band snapback. And that is to the benefit of the bears or the short sell traders for very, very quick positions. And that was up against 35,000. But the Russell has been weak, and it's weak alongside the Nasdaq. It's our small cap index. It is a little bit different than the S&P and the Nasdaq. But again, it has been weak. The peak of it in 2021 was in March. And now we see the sideways activity in the Russell, and it's actually forming a relatively decent box or sideways trading range. So we're going to go through the week. This is interesting. Markets have pulled back. And the question at hand, is the money going to get back into the market? Was it just retail traders that got spooked? Or was it something more widespread? We don't really see institutions doing too much. And if they were playing, the market most likely would not have bounced back. So as we go into Wednesday and Thursday, continue watching for the S&P at least 4120 to hold support and rally back. For the Nasdaq, about 13,000, simple level but effective. And for the Dow, it is off the 20-day moving average into the 34,000 print. Finally, the Russell holds support at about 2150. These are key focal points as we determine where the money's flowing. Out of the market, downside activity to come. But if this is just a normal pullback, support bounces and these levels will be defended. Always be careful and safe. This is Corey Rosenblum with tonight's Theo video update for May 11th, 2021.